Here is what actually, like for real, pumps the price of Bitcoin. Because while we're told a certain narrative often, the reality is that the factors that really pump the price of Bitcoin, well known, are not as often laid out for investors. So in this video, I want to discuss those exact things with you so that you can be armed with the knowledge the next time these things happen. Before we get into that, of course, smash the thumbs up button if you do appreciate this kind of content, and subscribe to the channel if you're new around here so that the algorithm will feed you more of this kind of content in the future. Let's get it. So first and foremost, we have to talk about the Bitcoin halving, which is a very standard narrative that we hear when we talk about Bitcoin. This is the known for us. We talk about the Bitcoin halving and its significance in pumping markets. This is the one that we all refer back to. This is not the unknown. This is our massively, massively known. And the rest of these things are known too. There's a lot less commonly discussed. But the Bitcoin halving, of course, is a very important event. It has been a nice guidepost for us as we've gone through these different market cycles for Bitcoin already. Although I think that, especially over time, the effect of the Bitcoin halvings are probably going to quite lessen in a dramatic way. That has not happened yet. We still do have a relevance for the Bitcoin halving, although it is strongly linked to actually the other big narratives, which are probably more in charge of driving the price if we're actually being honest about it. Although I do think the Bitcoin halving does remain quite important for the general conversation around Bitcoin, particularly in the Bitcoin 4-year cycle narrative, which is essentially this. You can see these green arrows here point out to the previous Bitcoin halvings. So the green area, we have massive price markups, where we see the price going through its parabolic move phase. That's the bull market phase. We have massive price drawdowns between 70 and 90%, getting a little less volatile over time. This, if of course the bottom is in, then this bear market was only 77% down versus 84% last time and 87% in the bear market before that. So progress, I guess. Once we have that bear market phase finished, we go through an accumulation phase. Now, this has repeated multiple times already for Bitcoin. It will probably repeat multiple times in the future. Although, if my suspicion on the Bitcoin halving is correct, then the Bitcoin halving may end up being less of in the driving seat for this whole conversation, whereas other factors we're going to discuss here are probably going to be a lot more relevant to that long-term Bitcoin situation. Because at some point, the Bitcoin halvings are going to make the amount of Bitcoin produced by miners relatively irrelevant. Maybe I'm wrong, but that's how I see it currently. So what is then really driving the price of Bitcoin? By the way, shout out to potentially 150, 180K Bitcoin next cycle. Woo! Let me know down in the comment section if you think that we could see 150 to 180K for Bitcoin as the peak price in the coming cycle. So let's talk about the money. This is the second big factor. This is one of the real factors that it comes down to for really driving the price. You want the price to go up, you need money to come in. It's as simple as that. When money leaves the market, the price goes down. When money comes into the market, the price goes up. Now, very, very, very nuanced and specific here. This is the stablecoin supply for the cryptocurrency markets. We can see on August 20th, we had a slight increase up to 125 billion approximately, and kind of just stagnated, come down a little bit, a few $100 million left the market. Not a lot to speak of. Although I am very encouraged by things like PayPal's PYUSD, which could introduce 400 million people using the PayPal app to stablecoins, which they can bring that money into the market. We have the Grab app, 180 million users. They're integrating cryptocurrency wallets for their user base. It's kind of like an Uber in Southeast Asia. And a lot of other stuff. X app, 400 million users. Right? We're talking about more people can bring more money into the market. That's how we get prices to go up in a very, very simplistic way. Now, as Sunny Decree pointed out here, and we've talked about, of course, here before on the channel, what if the 4-year Bitcoin cycle is just a myth and the real price is actually driven by the global monetary phases, the printing of money. So this chart here shows the price of Bitcoin charted against the growth of major central banks. So when we see massive injections of liquidity into the markets, when we see huge amounts of money being printed, the price goes up. You will notice, when do we have our peak prices for Bitcoin? Back in 2021, we had a peak price for Bitcoin basically at the same time we had a peak price for money flow from central banks. back in 2017. Same thing. And if you go right back, well, the 2012 cycle actually did also pretty much line up with that, although the 2014 price peak, not quite as much, although we did have a bit of an uptick in liquidity at that time. But the earliest one, yes. But really, I think these last two cycles, when we start talking about central banks and Bitcoin, become much, much more relevant because the market's actually become that mature to be relevant when it comes to talking about, well, how do central banks influence the price of Bitcoin? This is how. When they print money, good times are rolling, baby, and everybody's looking for risk in their portfolios. So they come into Bitcoin and they come into Ethereum and they come into every altcoin. They start buying dog coins and Harry Potter, Sonic, Inu, Obama coin. People are actually buying that now, even though the money supply is not going up. People are crazy, man. Anyway, besides the point, I think this is a very, very valid theory. And of course, we have seen inklings of market turnaround when China started printing money back in October of last year. Liquidity slowly started ticking back into the market. The UK put a little bit of money back in, but not very much. Japan putting money back into the market. But what we really need is the European Central Bank, the UK Central Bank, and the US Central Bank to really turn those printers on again. That's what's going to really get markets moving and really get global liquidity flowing, which means risk assets like Bitcoin will go up in price. A Bitcoin spot ETF could, to an extent, invalidate, at least in the short term, that model. More on that in a moment. But before we get into the next bit, which is talking about how China and the macro stuff can really affect cryptocurrency, particularly Bitcoin's price, I wanted to let you know about Wealth Mastery. This is my weekly cryptocurrency newsletter. This is the best damn newsletter in the cryptocurrency industry. Every issue is super jam-packed, full of alpha for you as an investor. This is what you need to be getting to your inbox. We cover the news. We cover altcoin alpha, altcoin reports, DeFi, technical analysis, and much, much more. You can join our 75,000 weekly readers and get this to your inbox for free. Look, I know how it is. Life's busy. You got the wife, you got the kids, you got the dog, you got the job. You try and, I don't know, work out once in a blue moon. You don't have time to be chasing every opportunity and finding all this alpha. Well, we're finding the alpha for you. We're putting it in your inbox. So check it out. Okay. Now, let's talk about the macro stuff. Of course, the money supply is a very macro conversation point. But I also want to talk about this, because this is very, very interesting. China credit impulses. Now, would you be surprised to hear that China credit impulses, the bottoms of which have basically coincided with the bottoms of the last two bear markets? That's interesting, isn't it? Now, I know to an extent this all coincides together. Is it the China credit impulses, or is it really just the M2 money supply from the central banks? Is that what caused this, or is it the other way around? Is it just Bitcoin? Bitcoin's the tail that wags the dog, truly, in the global economy. All this other stuff's totally irrelevant. I don't think so. I think we have to pay attention to this macro stuff. But look here, 2018, November 2018, China credit impulse bottoms out, and we have the bottom for Bitcoin a few days later, essentially. Go back to 2015, May 2015, China credit impulse bottoming out. Guess what? Here you go. Boom, 2018, Bitcoin bottoming. Oh, boom, look at that. May 2015, Bitcoin bottoming right along with the Chinese credit impulses. Interesting, right? Macro is very, very important. China, of course, as a part of the macro story, has been very important. Hong Kong's crypto policy U-turn injected optimism into a tumultuous 2022. Of course, we've seen a lot of stories in relation to how we're seeing the Hong Kong government trying to turn Hong Kong into like a big crypto hub with the approval of Beijing. That's a major macro story that potentially brings Chinese liquidity. It's all about the money again. The money flows. Where's the money flowing from? Where's the money coming from? Who's going to buy the coins? Who's going to buy the magic internet money, guys? Well, China might. China might bring the money back in. Mainland China. Currently only Hong Kong, but mainland money can get into Hong Kong, especially the big money from mainland can get into Hong Kong and then access these kind of products. They have been for a while, but on the black market. Now they have a clear path to being able to do that in a more legal way. And of course, when you talk about the macro stuff, which is what this part of the conversation is about, you can't ignore stuff like the Federal Reserve interest rates. And it's interesting. Look at this. The last time the Federal Reserve interest rates peaked, 2.5% in 2019, Guess what? That was when Bitcoin bottomed. Currently, of course, Bitcoin going through a bit of a rough patch, as you've probably noticed. Federal Reserve interest rates are high. So it's quite fascinating to see. We could even go back here potentially and see that, well, they're very, very low. So it's not necessarily the best signal, but definitely we're seeing a correlation here of really, again, risk on, risk off attitudes for magic internet money and the way the macro scene's working. And then, of course, there's the supply and demand reality. Look, it's pretty clear for Bitcoin. 21 million Bitcoin, max ever. 19.5 million have already been mined, 1.5 million left to mine. Most of that's going to happen by 2032. 4 or 5 million Bitcoin lost forever. This number is never going to increase. We are seeing a massive situation where essentially we've seen Bitcoin go from, during the COVID crash, a little over 3 million Bitcoin on exchanges to now where we're at multi-year lows. We haven't seen Bitcoin exchanges balances this low since January 2018. Pretty dramatic stuff that we're seeing right now. So huge decline in the amount of Bitcoin sitting on exchanges right now. Huge demand for Bitcoin continue to come in. That supply and demand dynamic becomes very, very interesting when you realize the scarcity of the asset. We see Bitcoin addresses with balances over 1 Bitcoin continuing to smash new all-time highs, currently at 1,021,382 at the time of recording this video. This is impressive stuff, guys. Demand keeps rising, stacking keeps happening. The supply on exchanges keeps going down. The Bitcoin halving's coming in April. The next one 4 years after that. Next one 4 years after that. In 2032, less than 1 Bitcoin per block is going to be produced. I mean, this is the kind of economics fundamentally that really is powerful long-term for Bitcoin. And then you have to realize that we have the Bitcoin ETF coming. BlackRock, Invesco, Fidelity, Franklin Templeton, 10 other firms, all trying to get a Bitcoin ETF approved. Trillions of dollars will have access to it. The initial estimates are going to see $30 billion coming into the Bitcoin markets in a very short amount of time once these products are approved for the general market. This is big, big stuff because remember, scarcity is starting to come into effect. More Bitcoin halvings, exchange balances falling, long-term holders going up, address balances going up. All this stuff works in the favor of price appreciation. Which then brings us to the hype cycle. And that story around BlackRock meets right in the middle of hype and fundamental realities and money supplies. Because when those Bitcoin ETFs get approved, we have money supply coming in, more money coming into the cryptocurrency markets, more hype coming into the cryptocurrency markets, supply going down on exchanges, of course. It's all fundamentally bullish. And one of the big things that moves cryptocurrency markets, hype, 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 hype. This is from October 2nd, 2021. Chamath Palihapitiya saying, Bitcoin's going to $200,000. Cool. Hype. Media was going crazy in 2021 over Bitcoin, cryptocurrencies. It was the new paradigm of money. Fast forward, crypto is dead in America, says Chamath Palihapitiya. That's, of course, earlier this year, 2023. Crypto's dead. It's over, guys. It's over. Media narratives, right? So the hype will come back, and hype drives price action without a doubt. In fact, hype and retail participation is what gives us the top in the markets. When the herd arrives, that's when the market is finished. The next cycle starts. Anyway, I hope this video has been informative for you and that you can use some of this information for making your own decisions when looking at how the next cycle is going to form up. See you next time.